Greetings traders. I wanted to do a quick video on my new risk indicators that have gone into pre-launch mode on Valentine's Day and are on the VigTech.io platform. Today I was asked a question about them and I just wanted to highlight a little bit about how to use it, just to make sure that it's really intuitive for you as I have tried to make them. First, on the VigTech page, once you log in, under the market indicators, you will see some standard breadth indicators that they have included. This is a fabulous place to go and take a look under the combinator, advanced decline, absolute breadth, trend for those who are familiar with it. But this is where I wanted to kind of focus in. Underneath that, there are three risk indicators by LaDucTrading. One is the risk range alert factor, and it is an algo trading signal strategy which works on a 30-minute time frame. So very helpful for folks who actually do trade intraday or want to have a smoothing indicator to help them press a directional bet. It was designed so that you could see when a particular ETF or index was bullish or bearish, and then of course the neutral in between, that kind of in between time when the decision making, if you will, the market participants is underway. And you can Google this. You can search and see by status. This is very, very clear, I hope, as a user interface, that it's traffic light, red, green, yellow. Red is bearish, green is bullish, yellow is neutral. So there really isn't a trade here when it's neutral. No trend, no trade. And that was my whole purpose of it. But the real advantage is when, especially in a market like we had today, is going in to see, okay, so when did SPY actually trigger bearish? Now, this was bullish and then it went neutral. And you can kind of see the shape of this smoothing algo. The point is, though, it did not actually trigger until today at 12:30. And if you looked at the market, you would have said, yeah, but we had a bounce, but it wasn't a sustainable bounce. And in fact, we closed negative, and we are very red in the futures right now. And that's kind of the point, is that this is very helpful to stay in a directional trend until it reverses and signals again, reverts back into bullish. So here's an example where you can actually go in and hit a timestamp history of when this alert has last triggered. And again, we're talking a change. So if this stays bearish, like for example the Qs, and I had mentioned this on my Twitter, had triggered. So SPY was today at 12:30, but the Qs triggered 2 days ago, and IWM short triggered yesterday. So let me show you that. So IWM is right here, and you can kind of see that, okay, it triggered here today at 1:30. Sorry, yesterday at 1:30. Forgive me. And SPY didn't trigger until 12:30 today. Qs, on the other hand, you can already see that it's underneath this kind of line of demarcation. You can go in here and look for a timestamp. And the last time that it triggered into a bearish, or, in other words, we're looking for a change here in trend, was on February 16th at 1:30. So now you can go and you can find your stock and you can say, okay, let's see, what did it look like? It says that it was a trigger, if you will, on the, now I have forgotten already, 16th at 1:30. So what happened here? That was the 16th, and at 1:30, you can kind of see where I'm showing you intraday, okay? It triggered short, and it stayed short. This is the key to this indicator. So it went into short mode and it stayed short. Long story short. So IWM, on the other hand, didn't trigger actually until the 17th. Let me show you. IWM triggered February 17th at 1:30. We'll go and bring up the chart. Just make sure I got the right one. Yeah, okay. IWM was the 17th, which was actually not on this red bar, none of these red bars, in fact, which is kind of curious, but this is trying to keep you in a directional trade, and this might have been a little bit choppy, let's put it that way, but when it finally did trigger, it was right here, and when it broke, that was the line to signal short, and it has stayed short since that 217 print. So that's what I am trying to accomplish, is to make a smoothing indicator so that you can see, for example, XBI short triggered last week on February 10th, and it has stayed short. So let me show this to you, okay? So here's XBI, and it said it triggered on the 10th, which was not this day, but that day. So if you had triggered, if you had been using this alert and seen that on this day it triggered a short, and you would have stayed short, and that's the profit you could have made, whether on a stock basis or on an option basis. We're not recommending what tactics you use, near term, in the money, out of the money, not spreads, nothing. That's all up to you. This is a do-it-yourself indicator. It is absolutely a signal. It smooths out when not only to enter a trade, but to stay in that directional bias until it says otherwise. So that's really how straightforward this is. Again, I had just announced these recently. They're working extremely well. I am looking for feedback. I am expecting a red open tomorrow. And so far futures are showing that out to be pretty weak, but we'll see. Anything can happen by morning. This is the risk range alert feature. And again, what was very bullish today were staples. And you could see that. I mean, you can bring that up on your screen. Stuff that was neutral, so far, retail, consumer discretionary, and home builders. Again, no trend, no trade. They may switch to bearish, in which case that would indicate an entry. And then when it reverts back up to bullish, it means get out of the trade, get out of that short. Most of these have been very bullish for a while, and you know that. But the market is changing. We're on the 1-year anniversary of the February crash last year, where we fell 35%. We have some interest rate regime change here of much higher. In fact, I have written recently in my Slack that we have, oh goodness, the U.S. Treasury 5-year yield is up 33% since February 1st. The 10-year is up 18%. We're talking just this month. And the 30-year is up 13%. So it wouldn't surprise me if we have a little bit of a tussle right now. And I have talked about this in the past, not just with clients, but also in my Tuesday macro to micro power hour with Jonathan, very much expecting some volatility. And specifically, if you want to know the particulars of that volatility, it's very much focused on some dangers here that stocks and bonds are selling off together. It's not a good sign. It typically shows more degrossing. That's gross deleveraging that's going on. And the places I see stress are on the risk parity model, the 60-40 portfolio mandates when you have stocks and bonds selling off together. And this can lead to liquidation events, creating severe cross-asset volatility expansion. And this is what we talked about in the Tuesday macro to micro power hour. So this is my client workspace that I communicate my market thoughts, my intermarket tells, all of my chase, swing, and trend ideas, risk on indicators where I talk and engage with clients, market moving news, macro to micro support, all of that good stuff. That's all from my trading room and my communication with clients. But my point is, these indicators are totally established to help you as a do-it-your-own investor or trader. They are based on several time frames, risk range alert being a 30-minute, and the go with the flow is based on a swing time frame. These only trigger end of day. So right now they're still showing as bullish. They probably change tomorrow, and it'd be lovely if I could show you. little data delay here in the wee hours of the morning. All right, well, this obviously means the video's over. So this is on a day time frame. It's in there. I will be posting more on the upcoming 2-week anniversary of this pre-launch, where we're going to let folks come in for 2 weeks free before they are rolled out globally on the Apple store. But as you can see, big picture, the trend is not broken, right? So even though we have shown some selling for sure across, indices and market sectors, big picture, the trend is still up. Nothing has busted. You don't see any red here yet, but we've gone from a solid green to now yellow in some cases. And this will be very telling, I think, tomorrow, especially with what is expected to be a down open. And that was my prediction to clients this morning. So I hope this helps in basically differentiating what we have going on here with my trading room and all of that macro to micro analysis and individual stock setups, of which we have covered. We cover so many in my live trading room and custom analysis for clients. But this is different. This is really just all by itself when this turns and how to use these alerts. And then you get a comfort level by seeing when they've turned and comparing them with your chart. Very shortly, March 1st, you'll be able to turn this on. This is an alert notification so that if you want to be alerted via SMS or email for any changes in alert, risk range alert factor, then you will be told literally when that happens on the half hour. You don't have to sign up. It's not an all or nothing kind of thing. You can just still use this interface. The mobile version will be available on March 15th with the Apple rollout. But that's it. I mean, it's really that straightforward. The work was creating the algo underneath the surface and then making it very usable, user-friendly, very intuitive. You can literally scroll over this and you can see the times. And this is all there is to say about that. It's to aid in your trend, swing, and chase trading time frames. And I very much look forward to your feedback, and I wish you much profitable success.